Welcome to Investment IQ Insights. Today, we're diving into the exciting world of index fund investing. Whether you're new to investing or looking to expand your portfolio, index funds offer a straightforward and effective way to grow your wealth over the long term. In this video, we'll cover everything you need to know to get started with index fund investing. When the Investment IQ Insights team embarked on our journey into the world of investing more than 15 years ago, we delved into extensive research. Back then, it was suggested that 70% of professional money managers, ranging from mutual funds to hedge funds, struggle to outperform the stock market in the long run. Fast forward to today, and that figure has soared to above 90%. It's staggering, isn't it? 90% of these experts whom we rely on to grow our investments are unable to surpass the market's performance. Here's a little secret we want to share with you. You don't necessarily need to outperform the market. By investing in the market itself, you're likely to outpace the majority of other investors and steadily accumulate wealth in the process. We here at Investment IQ Insights think that we possess some very good stock picking skills when it comes to buying individual stocks, but we realize that this type of investing isn't for everyone. It takes time for an individual to develop the skills needed to successfully pick individual stocks. For those seeking a simpler path to financial independence through investing, index funds offer an excellent solution. They streamline the investment process while still serving as powerful wealth builders. Despite our affinity for selecting individual stocks, we can't deny the appeal of index funds and even incorporate them into our own investment portfolios. Here's what Warren Buffett, often hailed as the world's greatest investor, shared on CNBC's On the Money. Consistently buy an S&P 500 low-cost index fund. He further emphasized, "I think it's the thing that makes the most sense practically all of the time." When the top investor in the world advocates for index funds, it underscores their potential as formidable long-term wealth generators. According to Buffett's perspective, $10,000 invested in an index fund back in 1942 would have ballooned to $51 million today. If index funds meet the standards of Mr. Buffett, they unquestionably deserve consideration in our own investment strategies. It's just common sense investing. You may now be wondering, what exactly are index funds? Let's look at an explanation of them next. Index funds are investment tools that we can use to track the performance of a specific market index like the S&P 500 or the NASDAQ 100. Instead of us or a team of managers picking individual stocks, an index fund invests in the same companies that make up the chosen index. For example, if we put our money into an S&P 500 index fund, our investment is spread across the 500 largest publicly traded companies in the US in proportions that mirror the index itself. Let's dive into the advantages and disadvantages of index funds. Advantage number 1. Index funds are incredibly tax efficient due to their low turnover rates. Turnover rate refers to the percentage of a fund's holdings that are exchanged in a given year. Since index funds rarely make changes to their holdings, they incur minimal taxes on capital gains compared to actively managed funds with higher turnover rates. Advantage number 2. Index funds have lower expenses because they're passive investments. Actively managed funds often charge higher fees for research, transactions, and other expenses that index funds don't have, resulting in better performance for index funds. Advantage number 3. Index funds provide instant diversification, reducing investment risks. For example, an S&P 500 index fund holds the same 500 companies as the S&P 500, spreading risk across a broad range of assets and minimizing the impact of individual stock fluctuations on overall performance. While index funds have proven themselves as excellent investments, there are a couple of minor disadvantages to consider. Disadvantage number 1. Index fund investors won't outperform their benchmark index since the fund is designed to mimic it. However, sticking to a disciplined, long-term index investing plan can yield returns higher than average especially considering that over 90% of actively managed funds fail to outperform index funds. Disadvantage number 2. Index funds lack flexibility, meaning they're tied to market fluctuations. While this may seem like a downside, it can actually be positive since it prevents investors from making emotional decisions during market volatility, which often leads to poor returns. Overall, the advantages of investing in index funds outweigh the disadvantages. Their consistent outperformance compared to active investors, both amateur and professional, makes them a valuable addition to any portfolio. Let's look next at how to invest in index funds. First up, let's talk about investing in index funds through a retirement account like a 401k or an IRA. If your employer offers a 401k, start by checking to see if they offer index funds as investment options. Many 401k plans include a selection of index funds due to their popularity and effectiveness. If they do, you can allocate a portion of your contributions to these funds. If you're setting up an IRA, you have even more flexibility. You can open an IRA with a brokerage firm and choose from a wide range of index funds available on the market. Just remember, with retirement accounts, there may be contribution limits and tax implications to consider, so it's a good idea to consult with a financial advisor if you're unsure. Now, let's talk about investing in index funds through a brokerage account. If you don't have access to a retirement account or want to supplement your retirement savings, opening a brokerage account is a great option. Start by choosing a reputable brokerage firm that offers low-cost index funds with no or minimal account fees. Once your account is set up, you can browse through the available index funds and select the ones that align with your investment goals and risk tolerance. Most brokerage platforms make it easy to buy and sell index funds with just a few clicks, so you can start investing right away. Whether you're using a retirement account or a brokerage account, investing in index funds is a simple and effective way to build wealth over the long term. Just remember to do your research, diversify your investments, and stay disciplined with your contributions. Let's next tackle a question that many beginner investors ask: how much money do you need to start investing in an index fund? The good news is that you don't need a lot of money to get started with index fund investing. In fact, many index funds have low minimum investment requirements, making them accessible to investors with various budget sizes. Some index funds have minimum initial investment requirements as low as $100 or even less. This means you can start investing in these funds with just a small amount of money. However, it's important to note that the minimum investment requirement can vary depending on the fund and the brokerage platform you use. If you're investing through a retirement account like a 401k or an IRA, the minimum investment requirement may be even lower or non-existent. Many retirement plans allow you to start investing in index funds with as little as $1 or $10 per paycheck. But here's the thing: while you may be able to start investing in index funds with a small amount of money, it's important to regularly contribute and build up your investment over time. Consistent contributions, even if they're small, can add up over the years and help you achieve your financial goals. So, whether you have $100 or $1,000 to invest, the key is to get started as soon as possible and stay committed to your investment plan. Remember, the sooner you start investing, the more time your money has to grow through the power of compounding. And don't forget, if you're unsure about how much to invest or which index funds to choose, it's always a good idea to seek advice from a financial advisor who can help you create a personalized investment strategy based on your goals and risk tolerance. And that's a wrap on our beginner's guide to index fund investing. We hope you found this video informative and helpful as you embark on your journey to financial freedom through index fund investing. Remember, index funds offer a simple, low-cost way to build wealth over the long term, making them an excellent choice for investors of all experience levels. If you have any questions or topics you'd like us to cover in future videos, please let us know in the comments below. And don't forget to give this video a thumbs up if you found it useful, and subscribe to our channel for more investing tips and tutorials. Thanks for watching, and happy investing!